Welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in.
We are financial advisors. However, we are not your financial advisor. Unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.
Alrighty, welcome back to the Asset Revolution podcast. Today is a conversation, and the person I'm conversing with, I've been very excited about for a very long time. It's somebody who's been doing a lot of great work, not just in the crypto world or in digital assets. He's done a lot of great work in the traditional world over his career. So I hope that's a little bit of a setup for you there, Steve, but I'd love for you to kind of dive in for the audience, who you are, and what are we doing here today?
Oh, you give me a lot of room to run there. So so I've been around the financial services business for a long time. Officially got into the business in 1993, but actually bought my first stock back in 1978. So I'm going to date myself here a little bit. I was back in high school and had a couple $1,000s that I had saved up, and my dad had been an investor forever. And an avid follower of the market. So I asked him, I said, Dad, what should I do? I said, I want to do something with this $2,000. And he said, well, you should buy some stock. And I said, well, okay, well, what stock should I buy? And then he said, well, Standard Oil of Indiana. And I said, okay. So you old timers that might be watching this, you might recall that back in the 1970s, it was much different when it came to buying a stock. And what I actually did was I bypassed a stockbroker, and Standard Oil of Indiana had a dividend reinvestment plan. So I wrote out a check for $1,000 to the registrar of the Standard and Oil company. And then a few weeks later, I got a notice in the mail that said I was the proud owner of about 12 and a half shares at 80 7/8. And so long story short, I held the stock for a while. It basically tripled in value as oil stocks went crazy in the late 1980s. Yep. And then it started to come back down, and I ended up selling it when I was a freshman in college, and still made what did I make up? I don't know. I think I still doubled my money on it. Yeah. Anyway, I was hooked from that point. But then it was finally in 1993 when I got in the business, and been in it ever since, mostly on the broker dealer side for the first few years. And then for the last 20 plus years have been working with financial advisors, mainly in a coaching capacity.
Wow. So you've helped a lot of people grow and maintain their businesses in a lot of different ways over the years, right?
Yeah. So I work very closely with financial advisors. In fact, I was the managing partner of what is now Carson Coaching. And back when I was running it, it was called Peak Advisor Alliance. So Ron Carson and I partnered in that business in 2001. And ran that for about 11 and a half years. And we grew that from 0 to about 1,000 financial advisors that we were coaching. So that was a great ride there. And then in 2012, decided to go out on my own. So I've been doing my own thing ever since.
That's wonderful. And I like that you dove into that, because the audience obviously are financial advisors. So to be able to scale this type of conversation to way past 1,000, I think is going to be really beneficial for everyone who's listening. So I hope you are perked up now that you know who you're talking to. And Steve, just do a little bit for us too. Tell us about the human. Who are you as a person now?
Well, I'll share some of my quirks. In fact, if anybody wants to go to my website, you can go to stevesanduski.com. That's STEVESANDUSKI.com, and just click on the About page. And I've got a rather unusual About page there where I do have some of my quirks and some of my human stuff. So I'll share a couple of the quirks here. So one is that my sleeping pattern, I think maybe is a little odd to a lot of people. So I'm typically in bed by about 9:15 at night, and I'll get up anywhere from 2 in the morning to maybe 5:30 in the morning. So whenever I wake up, I just roll out of bed. And in fact, today, as we're talking, I got up at, what was it? It was 2:57 this morning. I woke up. I woke up earlier than that. And I thought, well, maybe I'll fall back asleep. Couldn't. So I got up just shortly before 3 o'clock. So I've been up and at it early. A second thing is I work out every day, and I like to climb mountains. And so one of my favorite workouts is to put a backpack on, and I've got a 40-pound bag of salt in the backpack. And that was my workout this morning. There's some beautiful trails where I live here. So I went for an hour-long hike this morning with my backpack. I also do push-ups. So I'm a meticulous record keeper. So I've got a spreadsheet that goes back decades, and I'm not kidding here, that goes back decades for every workout that I've ever done. And one of the things I've been doing here in the past few years is push-ups. So my goal is to do 15,000 push-ups a year. Wow. And I have done that the last few years and am on track for that this year as well. So typically I'll do 50 push-ups and call it a day and put that in the spreadsheet. So yeah, so maybe a lot of people are like that. I don't know, but it seems to work for me.
No, I love it. And thank you again for showing us a little bit about who you are and a couple of those quirks, because I think we all have our own quirks, and it's always nice to know that even though we think we're alone or we're weird in our ways, it's somebody's going to be listening, like, you know what, I really resonate with that. So it helps us build a better connection. And that's what I'm all about. And that's kind of why this podcast is here, and why I love all the work you do, is because you love building those connections, it seems like, as well. So again, thank you for sharing. And you know what, let's use that as our transition to get to what we're here to talk about today. So again, very excited, because the topic and really what we're going to dive into is, how do advisors start talking to their clients, whether that be proactive or reactive or whichever form that takes, right? Because I think a lot of advisors need help, and there are gaps right now in how they should approach it. So I hope today will add a lot of value to those listening, and to how we can kind of go into less technical and maybe less inspirational, more about the art of going into that conversation with clients. So I know you have some things prepared. So I would love to give you the floor to show us, where do you want to start with? How do we have conversations with clients as advisors?
Yeah, well, I would start with what I call my digital asset checklist, which is essentially a few things that I recommend that financial advisors go through before they start having conversations about digital assets with their clients and prospects. So I think that would probably be a good place to start. And I'm happy to run through the checklist if you'd like.
Yeah, let's do it. I mean, I think that, to me, that I think of preparation when you say something like that. So it's all about that process of preparation, which I know a lot of advisors already do. So this will transition nicely. So yeah, please tell us about this checklist.
Yeah, so I'd say the first thing that we've got to do is we have to establish our philosophy or our investment thesis when it comes to or when it comes to these digital assets. Mm-hmm. And so the fact that you're watching this, I'm going to assume that most of you are already kind of going down the rabbit hole, or at least you're open to it. So that's the first thing, is just to really understand, well, what is my belief around digital assets? What's the thesis? What's the framework that I'm using for this? And why do I want to offer this or start providing advice on this to my clients? Mm-hmm. So just some things to think about in this area are, what am I going to offer? For example, am I going to offer just Bitcoin? Or am I going to offer Ethereum as well? Am I going to offer other coins? Am I just going to provide guidance on this? Or am I actually going to help people invest in this, and I'm going to allocate their portfolios in some of these digital assets? So those are certainly some of the key questions that you want to answer. Also, things like, let's take Bitcoin, for example, and you're going to have to decide, well, how much am I going to allocate to it? And is it going to vary depending on a client's risk tolerance? And are you going to rebalance, or are you just going to be buy and hold? If you're going to rebalance, what's the tolerance before you decide to rebalance? So some of these are going to be similar to any other investment asset that you're currently working with right now. But Bitcoin and Ethereum and these cryptocurrencies, they obviously differ from just regular stocks and bonds in terms of how we deal with it. So we've got to make sure that we understand what the philosophy is there. So I'd say that's really the first step, is really understanding your framework, your philosophy, your investment thesis here.
Yeah, and I love that that's the first thing, because it's really no different than how you would approach, as an advisor, any other new investment or technology or innovation that you are looking to add into your practice or your portfolios, or the possibility of adding it. So I think that's a very natural step for a lot of advisors to take, which maybe you could give them more comfort about diving into this space. So that's a great place to start. So let's say we've got an advisor, they've decided how it fits into their overall investment thesis. They've got a stance, they know how they want to position it. What comes after that?
Well, the second area I think would be every advisor's favorite thing to talk about and work on, which is compliance and E&O. So obviously this is a no-brainer. You've got to make sure that you've addressed the compliance issues, that you've updated your Form ADV if you're your own RIA, and if you're an IAR under somebody else's RIA, that you're able to do that. So just make sure you work with the proper folks, whether it's your compliance team, whether it's your outside compliance consultants, whether it's your broker dealer or whoever you need to. We've just got to make sure that we've got all the compliance stuff taken care of and updated. You've got your E&O insurance coverage. And so that piece is all set. So, some of the nitty gritty there, but obviously we got to get that taken care of. So I'd say that's number 2.
Okay.
And then I'd say number 3 sort of follows along, and that is just more the operations and the logistics piece. So as I mentioned earlier, that working with these digital assets is very different than the traditional stocks and bonds and even real estate. So you've got to make sure that you really understand how you're going to work with this, whether you're going to be working with, someone like, an Arbor Digital or a Coinbase or a Gemini, or, some of the different organizations that are out there that are now springing up to help financial advisors in this area. So you really have to dial in on, things like, how are you going to buy these digital assets? How are they going to be stored? What's the key management? How are you going to bill on these assets? Are you going to bill on these assets? Is it going to be more like an AUM fee? Is it going to be more of a planning type fee? So lots of questions in that area that you're going to have to answer as well.
Yeah, and thank you for giving a couple examples on those logistics and operations to think about. And yeah, they're thankfully, as more talent, as this space grows, we're getting more talent and energy that come into this space to continue to build the railways, right? To give advisors more options. So there are SMAs, there are Bitcoin only, there are ways for you to actually custody. I think you've had some conversations with many in this space, and I think one of them that I like a lot is Swan, right? They're a provider. They can actually do some really cool stuff in terms of both hot storage or cold storage. Just if you have clients that do want to take that ownership. So there are more options coming in. So to make these logistics and operations, really fit within how you operate your business traditionally, right? So I love that piece of it. And I think another thing to think about here, Steve, and I would love to get your insight and kind of the conversations you've been having with other advisors is, especially from an operation standpoint, the question whether to take a derivative exposure through something like GBTC, ETFs, or anything where you're not actually getting direct exposure, or via like an SMA or doing a direct buy of Bitcoin through one of those providers, is that these markets operate 24/7, 365. And so when you think about what does that mean for your business, that means if you're going to take that responsibility on and take that direct exposure, that instead of those derivative or more traditional wrappers that operate within the normal hours that we're all used to working, that's something you have to keep in mind, right? So when you talk to advisors, do you see them also addressing kind of that piece of it?
Yeah, I mean, it's a good point there, in that these assets trade 24 hours a day, 7 days a week. So to me, that really gets into your communication plan, and it goes toward setting expectations at the beginning of the engagement with your client. So if you're going to work with these digital assets, I think it's important that at the beginning of the conversation with your client, that you're both clear on what the expectation is here. Like if something blows up on, Sunday night, do you want your clients calling you, or something happens in the middle of the night in China? Do you want your clients calling you? So I think you need to think about what boundaries do you want to have or not have boundaries, because again, these trade 24/7. And then, there's a whole nother issue here that you're bringing up too about, do you want to get exposure via an ETF? Do you want to use GBTC, or do you just want to like directly hold the asset, whether you hold it at an exchange or you get it through a Swan or a Gemini or a Coinbase or a Kraken? You have to decide that, or whether the client wants to actually take control themselves and through their own wallet and different storage options there as well, where they control their keys. So lots of questions there. I don't think there's necessarily right or wrong answers here. I think, again, you just have to decide what's going to work best for you, how involved you want to be in these areas, and how much does your client want to take responsibility for this, or do they prefer to just leave it on an exchange because they're more comfortable with that? And for many clients, that's what they're going to want to do. So again, and it may vary from client to client.
Oh, I love this. Oh my gosh, this is exactly what I was hoping we'd be diving into. And hopefully these are thought-provoking themes that you're hearing from us already in all of this preparation work. Okay, so we've gone through logistics and operations, buying, storing, all of these things. So let's keep moving forward. What comes after that?
Well, I think another thing is, I think it's important for advisors to buy these assets themselves. And what I've said is that the best way to understand the future is to play with it. And so I don't want to minimize that these are toys or anything, but if you're going to be advising on Bitcoin or NFTs or Ethereum, I think you should own some, because you need to understand, how do these things work? How do you buy these things? Am I going to take control of my own keys? Am I going to leave them on an exchange? So on and so forth. So I think you need to understand how these things work. You need to know what it feels like to own these things and what it feels like to experience the kind of volatility that these things go through. So I think that's a key, is before you ever recommend this to your clients, that you make sure that you own some of this stuff yourself. I think that's very important as well.
Yeah. And when you sent me the checklist before, and this actually point was very important. I love that it was on there, and something we talk a lot about when we initially talk to advisors and we're in that discover process of where they're at. Because it's not only important to talk about what we should be doing and what questions we should be asking, but it's also important to talk about what we shouldn't be doing. And one thing we always recommend to advisors is that you shouldn't invest clients' money before investing your own money. If this is something that you're going to do, you need to experience this yourself. So that way you can go through that and be able, because that's the best way for a lot of people. And I'm one of those people, like through experiencing, through that. I actually really love that you use the word play. And while some may think of it as a connotation that these are toys, I think of it more as an open-mindedness. When we play, we're free flowing. We don't have this idea where we're working within boundaries. And that's kind of the ethos that you have to kind of have in order to keep your mind open when going through this. Because if you don't have that kind of play attitude towards it, what we've seen advisors do is just say, okay, I did it, but it's nothing like the traditional way, and I don't like it because it's not like what I'm used to doing, right? And that's a very dangerous thing, to shutting down to what possibly could be an opportunity. And so again, I like that you use the word play, but yes, definitely experiencing yourself, buying some digital assets. If you're going to use something, you got to know what the experience is that your client is, so that way you can describe that. And that all comes to how to have a great conversation with your client about these assets. So I love that you added that.
Yeah. And I'd say the final point here on my little checklist is to understand, how are you going to respond to the volatility and the FUD, the fear, uncertainty, and doubt that's out there?
Yep.
Because it is volatile and there's a lot of FUD out there.
And real quick, what's FUD? What is that?
Well, so fear, uncertainty, and doubt. And so it's things like, oh, China controls Bitcoin, or Bitcoin is bad for the environment, or Bitcoin is used by criminals, or the government's going to ban it. So there's all these reasons why people are hating on Bitcoin, as an example. And so you really need to understand, okay, well, how am I going to respond to that? So if I have a client that's pushing back on me, and again, you should never, coerce or convince a client to invest in something that they're really uncomfortable with. So I'm not suggesting that you come up with great sales techniques to convince your client to invest in something that they're really uncomfortable with. I'm not suggesting that at all. But there are a lot of messaging out there that I think is misinformed. And so I think it's important for financial advisors to have a clear understanding of what is the bear case, what is the negative case for these digital assets, and to really understand the bear case or the negative side just as well as you understand the bull case or the positive side, because you need to be able to speak intelligently about both sides of the equation here. And you need to know the bear case just as well as the biggest bears out there. So I think that's an important piece, is that you've got to do your homework and really understand both sides here so that you can speak intelligently and unbiased and, and fair and balanced, so to speak.
Yeah. And again, I think this just continues to speak to how this is how you would approach really anything that you were going to bring to clients, right? And I think an activity that, when I was a consultant for other advisors and they were looking to do new things and to build their practice, we would always go through with, a postmortem exercise, right? What would kill this or what would make this fail? Those types of questions, right? And then you go through enlisting, and that's where it's almost like you already have all that and all this FUD that's been happening or been released by media outlets over the years. So where you can easily access, okay, what are the biggest things I need to be aware of, and where do I need to start? So you went through a few of them. So if you're listening to this, that's a great starting place. But I really love that you've got this full checklist here. So just to recap, so we have the first one was getting a stance, getting a thesis, having a philosophy on it, right? And then the second thing was compliance, getting buttoned up and establishing all of the infrastructure within the firm to allow for this to happen. 2 is then understanding the logistics and the operations, right? And then we moved on to, what you should do as an advisor by experiencing yourself, and then with this last piece. So I really appreciate you diving into that checklist. So let's kind of dive into now the actual piece of talking to client. So how would you approach that? Do you want to start with, would we do it proactively? Should we do it reactively? Where would you start there?
Yeah. So the way I would look at it is I think a couple of things can happen here. So one is your clients or prospects might approach you. So they might just say, hey, I've been hearing a lot about this. What do you think? Okay. So I would say, let's have one conversation about that. And then the second is, if you decide that you're going to proactively recommend to your clients that they take an allocation here to one or more of these digital assets. So let's just start with, they ask you, they bring it up.
Well, that's how do you respond to that? That's what everyone's going through more often than not than proactive, right?
Right.
Yeah.
Yeah. So what I would recommend is that if they ask you about it, don't immediately give an answer to what their question is. So from a coaching standpoint, so one of the things that I do as a business coach is I'm not here to, my client asks me a question and boom, here's the answer. What I want to do is I want to do more discovery. So I want to get a deeper understanding of what it is they're really trying to solve, what the issue is, what the concern is. And so I'm going to go back and I'm going to ask them clarifying questions. And so I would encourage advisors to do the same thing. So if you have a client or a prospect that's asking you about the digital assets, instead of just spouting off everything that you know about it, I would say something like, oh, I'm glad you brought that up. We've been doing a lot of research in this area. I'm curious, tell me a little bit more about what are you thinking in this area right now? Do you already own some of these assets? So you've acknowledged that, hey, this is great. Thanks for asking. We've been doing research here. So now you're establishing some credibility, but then you turn it back around and ask them to give you some further information about, they say, oh yeah, I bought some Bitcoin on Cash App and it's just gone up in the year that I've held it. And I'm thinking maybe I should, get into Dogecoin or whatever. Okay. Yeah. So, that's one response. Or they might say, I think it's terrible, but all I read about in the news is Bitcoin and this and that. And I'm just, wondering, well, what are you thinking about all of this? So that's a very different conversation. So I think that's the key, is ask some clarifying questions so you can understand where the client's coming from before you start giving some of your thoughts and ideas.
Oh, yeah. Oh my gosh. And I love this so much because, again, for a lot of advisors, that's kind of what they already do. Again, when having other conversations, not about digital assets necessarily, but any other types of investments or financial planning or wealth management or any complicated questions that come up, or themes that come up, it's very similar. And I love this idea because what you do then is you establish a deeper connection with your clients, and you actually learn more about them when you take that approach. And that's where I think if advisors took the approach that instead of it being this scary thing, like, oh, I hope my client isn't going to ask me about this, I don't have anything on this. It's more about take it as an opportunity to learn more about them and to connect on a deeper level with them when they ask you or when they come to you about something new like this. And the way you present it is, again, use those open-ended questions. One of the favorite questions we have when we tell advisors, what they should do if they get clients asked, because it's a question we get, and I'm sure you get a lot, Steve, is what should I do if a client comes and asks me about this thing? So, and it goes even beyond Bitcoin when they ask about smart contracts. I saw this thing Cardano the other day, like they're getting questions like that. And so what we tell them is we always tell them, like, ask that, tell me more question. What else? Tell me your story and how you got to asking me about this today. Where did you start, right? Those types of questions can really uncover a lot of where your client's been, where they at, and what they're thinking for the future, right? And then that can help you dictate where that conversation is going to go. So thank you. And that's a great place to start. So where would you go? So let's say you jump in, you don't answer the question, advisors doing the right things, are asking those clarifying questions. What's the flow of the conversation look like after that?
Yeah, at that point, again, it depends on what their response is. And so the little 3 words that I think about here are what I call assure, defer, and embrace. And what I mean by that is, depending on how they respond, you're either going to assure them, or you're going to defer the conversation, or you're going to embrace it and move forward. So let me give you an example of what I mean by that. Yes. So an assure would mean someone says, I've been hearing a lot about this. I'm trying to keep an open mind about it. I'm just wondering what you think, Marc, about these Bitcoin and Ethereum, for example. And you might say, well, I can assure you that we are doing our homework on this. We've been looking into this for the past couple of years, and we're on top of it. And we're excited to have deeper conversations with you about that. So you're assuring them that you're on top of the situation, and now the door is open to move further. A second one would be if when you ask your clarifying questions and it's clear that they have a negative attitude toward it, then basically you would just defer and say, I totally understand where you're coming from. We've been doing our research on it and we just continue to monitor it, but there's nothing that we're recommending that our clients do it, or there's nothing that I would recommend that you do at this point. So basically you're acknowledging they don't want anything to do with it. It's fine. Move on to the next one. Yep. And then the third would be embrace. And this would be for a client who says, I'm really excited about this. And I'm just wondering, should we be doing something with this in our portfolio? Well, then that's when you embrace them and say, yes, we've been researching this for a couple of years, and let's talk a little bit deeper about what we want to do here, and so on and so forth. So then again, you'd go into your normal conversation whenever you would recommend an investment or change an allocation for someone like that.
Yeah. And again, I love it because it gives you these different pathways, which speaks to, again, kind of that the art of the conversation, right? And that's, I think we sometimes don't give ourselves enough credit for as advisors, that there is this element of, there's an art to having these types of conversations, because it's not easy. These are difficult conversations, but that usually means the difficult conversations are usually the one that yield the most trust, that yield the most connection, that yield the most loyalty after that conversation, right? So I'd love that you've now given an example for the audience on these different pathways you take based on whatever the response is from the client. Is there anything else you would add to that?
I would just say that you have to strike a balance here between sharing everything that you know about this, because you're probably pretty excited about this, yeah, and just letting the client know what they need to know. Okay. And so only you can determine in the moment how much of a conversation you need to have about this, because we got to keep in mind that you may only allocate 1 or 2% of their portfolio to digital assets, but you don't want 40 or 50% of your client conversations necessarily to be around the 1 or 2% allocation in their portfolio. Yeah. The weighting there just doesn't make sense. So So just kind of be thoughtful about how much of the detail you go into. And a good rule of thumb to keep in mind is that you should be talking about the benefits of this type of allocation and not the features. And so this is kind of like, sales 101.
Yep.
And so we want to talk about the benefits of an allocation to digital assets, things like greater diversification, perhaps counterintuitively, a reduction in volatility with maybe a 1% allocation, because the studies are showing that Bitcoin, as an example, has a correlation coefficient of about 0, which means it's not correlated either way to like the S&P 500 index. So it actually, even though it is volatile itself, when you place it in a portfolio, it might actually have a little bit of a dampening effect, or at least not increase it much, but the return potential could be very, very high. So the asymmetric risk here is very much in your favor, where tremendous upside. And then if it were to go to 0, maybe you lose 1% of your portfolio return. But for the potential upside, for many folks, that's a reasonable investment to take.
Yeah, absolutely. And I love you kind of went into benefits versus features. And yeah, and even though it's like 101, a lot of times we kind of sometimes forget, especially when something's new and we have these narratives that we're clinging on to. It's important to make that distinction for sure. So one thing that came to mind while you're going through that is this idea that when you're talking to clients about these, and this is more the reactive, right? It's important that it's okay if you don't have all the answers. And I think that's kind of the general gist here is, just make sure you have a lot of questions to ask too. And one of our favorite questions that we like to give advisors to learn more about their clients, especially in this space, again, especially if you're not going to go into a deep conversation, is just to ask them, hey, are you interested in learning more about it? Because again, they may come to ask you questions. They don't really even care about it, but they don't want to spend any more time on it than what they've spent with you, just asking that one question to you as your advisor. So if you know that they're not interested in learning more about that, it'll help you guide that conversation too. But then also if they say yes, that'll let you know, okay, I know what I'll need to do as an advisor for my clients. If they're interested in learning it, I know I can use that as an opportunity, again, to engage and to connect with my clients better. So that's kind of what we like to do too. Again, through questions, this conversation can be not as complicated as we may want to think of it as.
Right. Exactly. Yeah. So now let's talk about if you decide that you want to introduce it to your clients. So what would that process look like? So I would start with the checklist. So make sure that you've completed the checklist. You've gone through all of that. So you get all your ducks in a row at that point. Then the next thing that I would do is I would start identifying a list of your clients that you think might be receptive to this or would be friendly to this. So these would be clients that you probably are pretty good friends with, and that they're not going to be upset with you if you bring this up and they're vehemently against it. Okay. So then I would sit down and maybe even before you sit down with a client, talk to some of your friends, talk to some of your family, see if you can orange pill them a little bit and see what kind of feedback you're getting. So that'll give you just a little bit of practice. But once you're past that, sit down with one of your friendlier clients and just let them know that you've been spending some time, you've been doing some research, and just like you always do, you're always looking for new opportunities, new ways to enhance the portfolio, to find ways to diversify, to reduce the risk and, get better risk-adjusted returns. And what you've concluded is that, Bitcoin, for example, that, we're recommending for certain of our clients a 1% or a 2% allocation to Bitcoin. And, here's what we've seen. Here's what some of the results are. And we recommend that for your portfolio. And then at that point, just stop and see what the reaction is, see what kind of feedback you get. And then again, based on their feedback, they may say, oh, that sounds great. Boom, go, move on. And then, talk about the next thing. And so this would really be part of a portfolio review conversation with your client. I'm not sure that you should have a special call with them just to talk about digital assets. That might be giving it too much prominence, but just during the course of a normal, update review meeting, when you start talking about the portfolio part, this is when you can introduce it and and go from there. And then if they are like, absolutely not, I have no interest in that, then great. Then you move on and you talk about the next thing. So it's not your job to try and twist their arm to get into digital assets if they've got a real hang up with it. So.
Mm-hmm. No, I love that, because that's actually one of the things we do with advisors. We say, how can you organically introduce, like if you're going to be proactive, one of the easiest ways to organically start having those conversations is in conversations you already have set up. Those are those quarterly, semi-annual, or annual meetings with whatever the cadence is you have set up in your business. Just start, if that's something you guys are going to want to do, you can just start adding a simple question or two into that same conversation. So you don't have to go outside of that arena to take extra time in a different capacity to do that. So I love that you mentioned that. So thank you for doing that.
Yeah. So again, like we've been saying, I think one of the themes of our conversation here is that we're not really suggesting that you do much different from any other investment that you would be introducing to your clients.
Mm-hmm.
Just because it's digital assets or crypto or Bitcoin, we don't want you to really change everything that you're doing because of this. Yes, we have some logistical and operational changes because it's a different asset. It doesn't really fit within the existing traditional financial system, at least not yet. So that's different. But in terms of how it might fit within a client's portfolio, really shouldn't be much different than a conversation that you would have about maybe adding private equity to their portfolio. So yeah. And then I think the other thing, just like I said before, is to focus on the benefits and not the features. So again, you don't want to, twist their arm and, go spend way too much time on this, unless of course they're super interested in it. Then at that point, you follow their lead. But otherwise, I know all of us that are excited about this, we tend to just like want to talk about it.
Yep.
But we got to remember, our clients aren't necessarily as excited about it as we are. Where our role as a professional is to give them our best advice on how we think that they can best achieve their financial objectives with the least amount of risk possible. So that's really ultimately what we have to keep in mind here.
Yeah, you're so right about that. And I think one of the things I'll add to all of this too is, when you have conversations, usually you're documenting, taking notes, and the CRM that's available now, Salesforce or Tamarack or whichever systems you use for that documentation, that's becoming smarter every day. And one of the things you can start doing if you're an advisor listening is start just adding those keywords to those notes. So that way, when you're going through, because I think in a lot of these systems now, you can create those keywords that you can search for clients, so what we suggest is, take a quarter, take 2 quarters. If you're at the beginning of your journey, and we have this whole advisor adoption spectrum that we go over to help advisors understand where they are and where they kind of want to go. And then we kind of give them some strategies on what to do wherever place they are on that. So when we're at that beginning stage, we actually suggest something like that, is using those keywords within your CRM to start just tracking, like, who asked you, who said these keywords, or did you bring it up? Did they bring it up? And whatever the case is, then, during your quarterly review or during your semi-annual review, however you review your notes to see what themes are happening within your practice, is you can then search for those keywords. And that can tell you a lot of, where's the demand at in your business, in your practice for digital asset type, whether it's education, whether it's actually investing, whatever the case is. But just so you can actually track that, that would be meaningful to let you know, should you be moving on this a little bit quicker too? Because I think a lot of advisors would glean a lot of information from doing something like that.
Yeah, along those lines, another thing that I would suggest, and I do this frequently with my coaching clients, is we have debrief sessions. So for example, I'm working with an advisor and we talk about, okay, were there any prospecting meetings that you had here in the past couple of weeks where they didn't become a client? And so we'll debrief, we'll talk about it. Well, as you reflect back on it, what do you think you could have done differently? Was there a part in the conversation where they said this and you responded that way and you're like, oh, that's not how I should have responded, or I should have asked this question when they said this and I didn't. And so I think it's the same thing with these digital asset conversations, is that when you're having these conversations after the meeting, you should do a debrief, even if it's just with yourself. So make some notes. It's like, okay, how did this go? How would I grade myself on the conversation? Did I talk too much? Did I not talk enough? Did I ask the right questions? Did I have good responses? What else do I need to do my homework on because they asked me a question that I didn't know the answer to?
Yep.
So really go through and debrief. And this is how you get better. I mean, this is how the best get better.
Love
is they do a debrief and they figure out what could I have done better in this situation. And you mentioned the CRM system. You can take those notes and you need to track them somewhere so that you can easily access them after the fact, and you can see, are there any patterns or trends or themes that are happening here?
Oh, I love it. Absolutely love it. And I like that you mentioned too, that this is how advisors elevate and continue to stay at the top of their game. Right. And it really resonates, especially to me, because, I spent my first life as a tennis player. And so my idol in that world is Roger Federer. And even if you're not a tennis player, I know a lot of people idolize him. So, and he's been a dominant force for 2 decades, and no one's ever done that. And you see 2 other people, Djokovic and Nadal doing the same thing. And the theme across them is that they're constantly evolving. They're constantly doing those types of debriefing with themselves after matches, after practice sessions. So it's a lot of those same themes. So for any athletes out there who are also advisors, maybe take a lot of those practices that you're used to and apply that here, and not even just to digital assets, but in any type of evolution of your financial advisor career. So thank you for saying that, Steve. That's very enlightening. It's a good reminder, because I think these are a lot of things. What is it? The saying we used to have is, we get a lot of time to work in the business, but we don't get a lot of time to work on the business as an advisor. Like when you're in a lot of meetings and you're, planning, selling, and you're talking to prospects, and you have all of these things that you're working in your business, but sometimes it's really hard to get that time to work on your business. So those types of debriefing activities, you got to bake those in there so that you're continuously working on that business. So it's always a good reminder, even if it's 101 or even if it's something we've known for years. It's always good to have that person reminder, which is why I love that, your business and what you do for advisors and coaching.
Yeah. And that's one of the reasons why good coaching works, is because it forces you every couple of weeks or every week to take time to work on the business. You've got a third party who can make observations, who can point out the blind spots. And so that's one of the real benefits of it. And if you're not working with a coach, then maybe your spouse can help you with that, or someone else in the office can help you with that. But definitely take the time to do these debriefs, do these self-evaluations so that you can figure out what you could have done better.
Oh, I love it. So
the other thing.
Oh, sorry, go ahead.
I was just going to say another thing that I would just add here is we're just talking about how do you have these conversations and how do you communicate, is I think we're at the point where, again, you've got all your E&O, you've got your compliance and everything squared away. So you're in a position where you can now have these conversations. I think we should start thinking about doing webinars on these topics. And so this is a way for you to reach a larger audience and take a particular aspect of digital assets or Bitcoin and do a webinar on it. And maybe you start with, let's say you have a prospect list of 1,000 emails that subscribe to your weekly email newsletter that you send out. Maybe you send out an invitation to 200 of them and just see what kind of uptake you're going to get on that, what topics may or may not be resonating with them. Maybe you get a whole bunch of unsubscribes because now they think that you've gone all crypto on them. So I would just, experiment with a smaller part of your prospect list and consider doing a webinar on one of these topics and see what kind of, what kind of interest you get. So that's one idea. And then also blogging. I think it's very important to start doing some blog posts on digital assets, just again, so that your clients and prospects know you're staying on top of this, because the reality is the stuff's not going away. It's only going to get bigger. And if it appears that you're falling behind, that's going to be a problem. Might not be a problem today, might not be a problem tomorrow, but next year, the year after, it's going to be a real problem if you continue to just avoid this whole area and say, I'm just going to try and ride off into the sunset. It's not going to work. So I think start getting the word out that you're knowledgeable in this area and that you're friendly to this area, I think will be important.
Absolutely. I couldn't agree more. So is there anything else you would add in terms of having the conversation with clients? Because we've now gone over kind of the 2 different types of conversations we can have and dove into that. So I'd like to end off going into kind of a little more outside the box a little bit and see kind of what you think crypto and the financial industry impact of crypto or digital assets is going to be. But before we do that, anything else you would add to having these conversations with clients, or something you would end off with?
Yeah, no, I think we've covered a lot here. So I think the key is just continue to get yourself educated in this area. Make sure you get the compliance and the operational pieces squared away, and then start having these conversations. Start small, experiment. You don't want to blow up your practice on this.
Nope.
And so just take it one step at a time and move forward from there.
I love it. And yeah, I love your suggestion of webinars too. And so if you're listening to this and education is important to you and just getting up to speed and you want to do something like that, that is something that we do at Arbor Digital. There's no commitment required for us to be able to come and do that for you. There are some things required to do it, but that's where we can have a conversation at least about it first and find out what best fits for you guys. But so if you're listening, reach out to us. We'd be happy to do that and execute on that idea that Steve just brought up for you.
Yeah. And so that's a great point. So if I'm understanding you correctly, like you guys could be a guest on someone else's webinar.
Yep.
Yeah, exactly. So, which is great because that way the advisor doesn't have to be the complete expert. You bring on another outside expert in this area, like someone from Arbor Digital. And then you as the advisor, you basically interview that person on the webinar, and then we have Q&A. So
exactly,
I think that's a great way to think about it.
Yep. And that's exactly how we execute it. So let's do this now. So let's kind of go into the broader ecosystem. Let's talk a little bit about, because I would love for the audience, because you have conducted and continue to conduct a lot of interviews with a lot of smart people in this space. And I would love for you to kind of share both your experience from that, but also personally, what do you feel that the financial industry impact is going to be with blockchain, crypto, digital assets?
Yeah. It's hard to put into words what I think is going to be happening here. And I think that we've had such a massive change in our world over the past few decades because of digital technology. So whether we go back to the invention of the microchip or the transistor, I mean, basically this, when we get to the start of the digital revolution, our world has never been the same. And what's happened here since 2009, when Satoshi unleashed Bitcoin on the world, is everything that was happening with digital now is happening with money. And money touches everything. And so that's why I think it is so important for financial professionals to learn about this area, because anything that can be turned into a 1 or a 0 can and will be. And that has now happened to money. And what this is unleashing, we're not even in the first inning. I mean, we're just like getting in the car, driving to the ballpark here.
Yep.
In terms of where this is going. And so we've got, because of blockchain technology, we've got Web3, we've got the metaverse. I mean, we've got all these crazy things that are going on. And where this is all going to go, nobody knows. And anybody who says they know, they don't know. They're just trying to spin a good story. But what I'm very clear on is that this is not going to stop. You cannot put the genie back in the bottle. And so we've got to understand these digital assets.
Yep.
We've got to be open to the idea that the future of financial services, the future of money, the future of investing could look very different from the past. And in fact, I sent a tweet out here the other day, basically trying to compare Elon Musk and Warren Buffett. And the point that I was making is that Warren Buffett, we would all consider him to probably be the greatest investor of all time. Okay. But what is he, 90 years old now? And so I put a poll out there and I said, let's pretend it's November 2021 and Warren Buffett is 21 years old and Elon Musk is 21 years old. Over the next 50 years, which of those two people do you think is going to create the greatest wealth? And I'll just ask you, Marc, what do you think if you had to answer that?
I mean, yeah, again, so I can't help but think my answer would be biased because I'm a younger myself, but yeah, I have to go with Elon as my answer.
Okay, well, you'd be in the majority. So
Yep.
75% said Elon and 25% said Buffett. And the point I was trying to make with doing a poll like that is that Warren Buffett represents the past. He represents the greatest investor of the past, when investing in the past was based on cash flow, discounted cash flow analysis, big corporations, big brands, the post World War II boom that we had, the growth of the consumer society. Okay, so Warren Buffett benefited from all of those trends. But now that we've got digital money and we've got Web3, we've got the internet, what I think is going to happen is the way that value is going to be created in the future is going to be much different. For example, instead of wealth being centralized, through corporations, it's going to be decentralized. We've got DAOs that are in the very, very early stages, for example. We've got the creator economy. We've got tokens. And so I think a lot of the value in the future is not necessarily going to accrue to a corporation and its shareholders, stockholders, as much as it's going to go to the token holders, the creators, the people who are part of the communities of these different types of organizations. So I think, again, it's going to be very different. And I don't know where it's going to go. I just know it's going to be very different. And I am so excited about all of this stuff. It's like, maybe that's why I get up at 3 o'clock in the morning because I think about all this. But my word of advice to advisors is, don't think that just because this is how it worked in the past, that it's always going to work that way in the future.
Yeah.
Because it's just not. I mean, digital technology, digital money, and internet and communities and generational differences. I mean, we haven't even talked about that. I mean, I'm actually a baby boomer, and I don't know what you are, Mark, but I'm guessing you're a millennial. I'm guessing
you'd be correct.
Yeah, and so I mean, I've got 3 millennial kids, and so it's interesting. So I'm the baby boom generation raising 3 millennials. So I feel like I've kind of straddled these different generations, and I think I've got a very open mind about all of this stuff. And so I think for advisors to be successful, you've got to have this open mind, and you've got to start embracing these things and be receptive to the idea that the future could look very different from the past.
Yeah. And I love that we're going into this because you've mentioned a couple of things. We can take this in many different directions, but I think the thing that stands out, and especially if we're staying on this theme of like just talking about it and having conversations, that we as human beings, like here's what I like to what we tell advisors too, is that human behavior hasn't changed, right? Over the hundreds and hundreds of years, thousands of years of existence, right? So the human behavior is still going to be there. So we crave that certainty. And I think another reason why it's scary for advisors, especially ones who are so ingrained in a traditional legacy system, and they've built their lives and their careers, their families, and their happiness through those systems, to say that that's no longer going to be the thing, that's a tough thing to tell them. And that's a tough thing to come to the realization of and internalize. And so one thing we always preach to everyone in the space that we talk to is, you have to give people the space and grace to come to that realization and internalize. Because your job, if you're in this space right now, is to just give them that space and help. And that's where, again, that coaching aspect is just help them get to where they want to be and meet them where they're at, right? Because if they're intellectually honest or curious with themselves, they'll inevitably start going down that rabbit hole. And you and I were discussing, before this, that rabbit hole kind of never ends right now. And there's this level of uncertainty, and there's this gray area. And you mentioned this just, a few seconds ago, is we don't know what this is going to look like. And, when we talk to advisors, we're upfront with that when we tell them we don't know exactly what this is going to look like. Our promise is that we are on the frontier, and we're going to be the people staying on the frontier. So that way, when changes and when directions or when things move or evolve or go a certain way, we'll be ready regardless of where it goes. And, that's value, right? And that's kind of the same thing you position with your clients when you're building wealth plans or financial plans, and you're positioning them to be successful in life, regardless of where it is. But you have to be able to operate in that kind of gray area, know that the future is not certain, but you got to have that kind of optimistic outlook. So it sounds like you have that, even though you don't know where it's going, there's still that uncertainty. You're excited by this space. So is there anything you do to make sure that you don't get overly excited about this space?
Well, again, I think I would go back to, I said that you've got to understand the bear case just as well as the person who is a proponent of the bear case. And I've been saying this for decades to financial advisors when I have like an investment conversation is, yes, we want to be bullish, but you need to understand what could go wrong. And so I'm always looking at research of people who are very negative because I want to understand, well, what are they seeing that either I'm not seeing or I'm ignoring, or I'm seeing, but I'm dismissing. Mm-hmm. And so I just have to have enough self-awareness to know that, okay, Steve, don't get carried away on this. Even though you think this is the greatest thing, don't get carried away, understand what could go wrong. And so I always try and figure out how can I, to some extent, temper my enthusiasm by not doing stupid stuff here. So I think you've got to be widely read, and you've got to understand the other point of view. You may not agree with it, but at least you need to understand it. You need to be open to it. And, I think the other thing I would say, just to maybe add on to what you were saying here a moment ago about human behavior, is I would agree that aspects of human behavior don't change, but the way that we express our behavior changes over time as a result of technology and the different ways that we can communicate. So just take the internet, for example. Yep. So when I was growing up, when it came to video games, it was Pong. And I don't know if anybody watching or listening to this remembers Pong, but it was, a screen and you had a thing where you'd kind of move it and you got this little bouncing ball, that would go. And it was made by Atari and Nolan Bushnell. So that was like the early 70s technology. Now, I totally missed the whole gaming revolution. I mean, I have a nephew, for example, who spends a lot of time on Twitch and on these video games, and that's his community. Yeah. And he, he's never met these people in person, but they just put the headphones on, they're playing these games. It's their social network. And so community, I don't think is going to change. Our desire as humans to be in relationship with other people, I don't think is going to change. But the way that we can express that is changing dramatically because of the technology. And so again, getting back to this idea of where value is going to be created, because we have different ways to express human behavior and to communicate and connect with people, I think that's going to change the ways that money can be made over time. Yeah. And so again, I think there's a lot we could talk about, but I know we're bumping up on time here. So hopefully that's just it's whetted people's appetite a little bit.
Yeah, I think we just need to get back you here for a second episode is what I'm hearing, because there's so much more we can dive into. Well, I'd like to end us off with one thing, because one thing I love about your podcast and what you do is you talk a lot about books and keeping an open mind and everything. And it seems like when you read, and that's where I think the greatest form of keeping an open mind is reading, right? So books are a big thing we talk about with advisors who are looking to get in the space. So I know you have a ton that you've read, but if you could pick one or two that you felt really opened your mind to something about digital assets, not just Bitcoin or anything in general, and you can pick, but what's a book or two that you would recommend advisors who may be struggling to keep that open mind, but could get them engaged in the space?
Well, so one of the books that I think is good for people that are trying to understand a little bit about the technology, and this is, I'm going to say Bitcoin in particular, it's a book called Inventing Bitcoin. Okay. So it's really written from for a layman, so to speak, but I think it's well written. So I think that one is pretty interesting to read. And then, there's a lot of different books out there. Maybe one that's really prominent out there is one called The Sovereign Individual that was actually written back in the late 1990s. Now, some people say it's the greatest book, one of the greatest books ever written. Mm-hmm. I think there's some things in there that I definitely don't agree with. Yeah. But I think it's something that a lot of folks in the digital space are reading. So I think it's something that should be on your reading list, because you need to know, well, what are other people thinking? Mm-hmm. So I think that's an interesting one. The Bitcoin Standard, another popular one that I've read. And But the other thing I would say is when you read a book is understand where's the author coming from, because everyone's got an agenda.
Yep.
Everyone has a point of view. Everyone has a bias. And so any book that you read, you need to understand those things, because that's going to help you be discerning about, well, is this really true what they're saying, or is this only true from the lens through which they're viewing things and the lens through which they're viewing history?
Yep.
And so I try to be very conscious of that when I'm reading a book and knowing where's this author coming from, because they're going to have a certain view and they're going to express that. So I just can't believe that everything they write in here is definitely true. I have to be more discerning than that.
Yeah, you can't just take it as gospel when you read it one time. Yeah, no, that's really important. And thank you for sharing those books. And again, if you're listening, please, I haven't read The Sovereign Individual. It's on my list. So you saying it now is making me want to bump it up the list. But
it's a slog, I'll tell you, though. It's not an easy read.
Yeah, I might have to Blinkist that one if I'm being honest on that.
The other one is it's not called I don't think it's called The Fourth Turning, but I don't know if you know which one I'm talking about, but it was written a number of years ago as well. Okay. But it basically talks about it's a book about generations, essentially.
Okay.
That as we go through, like every 4 generations, there's different cycles that happens in the world, typically over the course of like 80 to 90 years.
Oh, interesting.
And right now the idea is that we're in the 4th turning, which is basically the time of massive disruption. And oftentimes it leads to big wars. And hopefully that's not going to happen this time. But that's another big think type of book to try and put time periods in perspective. And so that's another interesting one as well.
Yeah, it makes me think, it sounds like something Matthew Lamarle. Have you heard of him?
He's not the author of the one I'm talking about.
Yeah. Well, I don't think he's the author, but he's a hedge fund, and they're directly in the crypto space that we follow. And so a lot of their investment thesis is around something like that. So I'll have to fact check what he was talking about, but it sounds very similar. It might be the book you're talking about, but no, that sounds interesting. And I need to add that one. But I guess one book that I would say too, if I could recommend something, it's actually a non-crypto book. It's funny because I think it's like half crypto books and then half non-crypto books that actually get you open-minded about crypto and digital assets, right? And the one that I think was eye-opening for me is this idea of networks and hierarchies and how they've played a role throughout civilization forever, and how, we're coming now to this age. And you were talking about this before, how, with, Warren Buffett and how discount cash flows, normal incorporated businesses, and how you can view and participate in that. This book kind of goes into networks and how these network affect businesses like the Facebooks, the Googles, and now with blockchain for that to exponentially develop these networks. So it was really interesting getting that history on networks and hierarchy. So it's called The Square and the Tower, and it's by Neil Ferguson. And the first book I read from him was actually The History of Money, because that was one of the things I had to learn when I got into the Bitcoin space. I started looking, I'm still pretty young. I don't really know what money is like from back then. So I had to do that first, that whole learning curve. So that was one of the first books I read, just learning about what money was. So that's a book I would recommend. I don't know if you've heard of that one either.
I haven't. Another one that I would recommend, which is an interesting read, it's called Bitcoin is Magic. And it was written by David Z. Morris. And he's a writer for CoinDesk. And I actually did a podcast with him. In fact, I read the book. I'm like, this is really cool. So I reached out to him and we did a podcast on it, which was a lot of fun. But it's just kind of some interesting thoughts from him. And he actually has a PhD. And so he really understands communication and talks about how Bitcoin is like a communication medium. Anyway, just some interesting ways to think about it and a little bit of mind expanding. So that's another interesting book to read as well. Bitcoin is Magic by David Z. Morris.
Yeah, I love it. And thank you for mentioning that. Yeah, that's actually one of my favorite episodes. I think when he was talking about how when Thomas Edison invented the light bulb, he said it was actually a communication medium. And I had never thought about it. Like it was total there. But Well, I know we can jam forever on all this, books, what we've done, our experiences, all that stuff. But I'm going to cap it off today because we went through a lot. And if you're listening, I know you've probably got a lot to think about. And I'd love for you to let us know in the comments of the show notes when you listen to this episode. Put us in any questions that you have, any other recommendations for books. We'd love to engage with you on that. But I always like to end off too. So Steve, you've got a lot of great content. You're doing such great work. Where can people find you? I know you mentioned your website before, but please use this time to plug anything else you want to plug.
Yeah, appreciate that. Yeah, definitely go to the website, stevesanduski.com. And I also have a newsletter that I put out every so often, so you can subscribe to that. I've got several different podcast shows that I do. One is called the Digital Money Advisors, so would love for you to subscribe to that. I also have Between Now and Success, which is more of a advisor practice management show that I've been doing since 2014. And I'm on Twitter, so follow me on Twitter as well, and connect with me on LinkedIn.
Wonderful. We'll put all of that into the show notes for y'all that listen, so that way you can get in touch with Steve and start consuming what he's been putting out there. Highly recommend it. But again, Steve, I'll end this off by saying thank you so much for your time and energy today and for everything you're bringing to this space.
Thanks. Appreciate it, Marc.
All right, everyone. We'll see you soon. Bye. We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.